Alright, so welcome to our recorded lecture all about the overview of PNG taxation. This is part 1 of the lecture. Okay, so we'll try to cover the nature and characteristics of income tax, definition of taxation, issues and principles guiding a tax system. Okay, so what are the tax mix principles, national and provincial taxing powers, the provisions of the Constitution, structure and interpretation of the income tax legislation, and the operation of income tax system. So when you talk about income tax, okay, tax is a compulsory transfer of resources from private to the public sector. Okay, so there will be certain criteria on how to calculate it, uh, and it is also drawn. There will be a distinction between tax and price commensurate with some property or benefit. Okay. Now, when you define taxation, okay, that is an imposition of compulsive levies on individuals or entities by government. Okay. The taxes are levied in almost every country of the world, primarily to raise revenue for government expenditures, although they serve other purposes as well. So, with regards to primary purpose, the government needs money, and taxation is, or the tax is considered as a lifeblood of the government. So, almost all countries have it. There will be several or few countries that doesn't have uh, or doesn't impose taxes. And also taxation have different purposes. Okay, so later on we'll also talk about it. So as mentioned a while ago, the primary purpose of tax is of course to raise government revenue. That's part of the budget of the government. So the reason why government needs money is of course social goods, okay? Especially in revenue generation, social goods. It includes that benefit everyone but cannot be charged individually. So what it means is that when government uh, provides social goods, it will be for the benefit of all. They cannot specifically only say this particular person will only benefit on this tax and this will not. And also merit goods. Okay, it needs to support education, health, and transport infrastructure. Now, other purposes of tax includes preventing market failure, provide economic regulation, especially if there will be some goods that needs to be regulated. Okay, redistribute wealth. When you say redistribute wealth, those income, those person who are earning more, and then those person who are not earning much, okay, will all, of course they will be imposed with tax, but as especially in individual taxation, as your revenue increases or income increases, that tax rate will be progressively increases, and that will be collected and then it will be redistributed to all. Again, social goods and merit goods. Maintain a distribution of political power between national and provincial government. Now, what are the different forms of taxation? We have, of course, income tax. This uh, particularly affecting those who are earning income, whether it's an individual or a company. And GST, or goods and services tax. Most of us are familiar with this when we buy product from a GST registered company or individual. We will be imposed with certain or added with certain percentage over the price of goods. Custom duties, this is the import duty charged to those products coming from a different country and entering our country. And then stamp duty, which is paid to or stamped to all documents, especially for transfer of properties and agreements. We also have excise duties. These are imposed on manufacturers of products or production of goods. Wealth tax. This is our tax that imposed on the wealth itself. So it doesn't focusing on how much it is earning. It is focusing on how much the value of the property itself. Inheritance tax will be imposed, of course, against the will. Entertainment tax, these are taxes on certain entertainment or hospitality industry. Capital gains tax, these are tax on profit from the sale of property, but the capital gains tax is not included in the tax code. Okay, what are the tax mix principles? Okay, so we have direct and indirect taxes. Direct taxes is primarily tax on a natural person and they are typically based on taxpayers' ability to pay a measure of income, consumption, or net wealth. Okay, so example of this will be income tax. When it comes to indirect tax, example of this will be GST, which impose on production of or consumption of goods and services. So just imagine, it is not your capability to earn income. You are being taxed because you are consuming something. Okay. Another example of this will be excise tax. Okay. It is imposed on your privilege on producing products and also custom duties and import duties. So in distinguishing tax base on effect of distribution of wealth, we have three types. Proportional, so it means that you are imposing uh, the same relative burden to all taxpayer. Progressive, as I mentioned a while ago, the more you earn or the higher you earn, the more tax or the higher the tax that you need to pay. Regressive is less than proportional raise in tax in a relative burden. The example will be GST. Now, issues in principles and principles guiding a tax system. We have three principles: equity, simplicity, and efficiency. So under the equity principles, the tax system principally is fair. Okay, so all taxpayers in the same circumstances should pay the same amount. So if I'm earning 10,000 kina and if you're earning 10,000 kina, we will be charged with the same amount. Simplicity, legal simplicity, and the ability to predict the amount of taxpayer of a tax in the particular transaction, okay, that it will generate. So in the case of corporation, okay, or companies, they are paying tax, okay, with an estimated amount, and then in the future they will charge it. When we talk about company taxation or corporate taxation, we'll deal with it. So it's quite convenient because you already knew or you already have an estimated amount that you will need to pay. Okay, and then on the final due date, you will only have to pay or have to just adjust how much you need to pay, or you can still carry over any excess of that. When we talk about efficiency, we talk about neutrality of the tax system. A tax should not affect taxpayers' market choice. Okay. Now, national and provincial taxing powers. Okay, national government is the only authority which levies an income tax. So, meaning provincial government should not have that power to impose income taxes. But it doesn't mean that the provincial taxes cannot impose other taxes. Okay, only a particularly income taxes cannot be charged, or the provincial government doesn't have any authority. Sales taxes imposition was a power vested to provincial government and GST, but it was removed by passing of the VAT law to align with centralized tax system. With regards to this removal of collection of VAT collection, there was a dispute by provincial government, and then there was an agreement between the national government until the new GST law was passed. Okay, so now VAT revenue were shared by national and provincial government. This practice is still in place except for ARB. Of course, ARB collects the GST, all the GST collected. Now, if you look into the Constitution, there are provisions under the Constitution. We look into Section 290, Section 1. Notwithstanding anything in this Constitution, the raising and expenditure of finance by the national government, including the imposition of taxation and the raising of loans, is subject to authorization and control by the Parliament and shall be regulated by an act of the Parliament. So it means that the taxation, imposition of the taxation and raising of loans will always be under the control of the Parliament. In Section 210, subsection 1, it says, the Parliament shall not provide for imposition of taxation, the raising of loans, or expenditure of public monies of Papua New Guinea except on the recommendation of the head of state, acting in accordance with the advice of National Executive Council. As you can see, this creates a control, okay, with regards to the power of the Parliament. Although Parliament has the power of taxation, they cannot impose that one or raise loans without recommendation from the head of state, and there will be advice coming from the National Executive Council. So in that case, Parliament cannot just say we have to raise or impose additional tax or raise loans. There should be a basis on that. Now you can see it in the same section, and now in subsection 2. Okay, the Parliament may reduce but shall not increase or reallocate the amount or incidence of or change the purpose of any proposed taxation, loan, or expenditure. So they can only reduce, but they cannot increase or reallocate. And then section 187, the imposition, collection, and distribution of taxation by provincial government and the local level governments. These are the provisions stated at the Constitution. Now these are tax legislation these are the parts of the tax legislation. We call it Income Tax Act 1959 or ITA 1959. Okay. So you can see the structure. There will be 9 parts. So preliminary, administration, liability to taxation, returns and assessments, objections and appeals, collection and recovery of tax, penal provisions and prosecutions, registration of tax agents, and others or miscellaneous. Related legislation, of course, we have Income Tax Regulation 1959, Income Tax Rates Act, Income Tax Salary or Wages Rates Act, Income Tax Dividend Withholding Tax Rates Act, Income Tax International Agreement Act 1987, Bookmaking Act, Stamp Duties Act, and then Goods and Services Tax Act. Now, as previously mentioned, no local income taxes at provincial and local level, and only national government imposes income taxes. And that's all for this recorded lecture. Hope you learned something.